It's Tuesday, January 11th, 2022. I'm going to start this video out today with some good news because there's people out there that say I'm too negative, too pessimistic, and I need to be more positive. So here's some positive news for all of you. Bank of America will eliminate non-sufficient fund fees, and they're going to cut $35 overdraft fees to just $10. So that's the good news I want to start this video out with today. But who needs these fees when Bank of America can go to the Federal Reserve, borrow money at 0% interest rate, and then charge you 25% to use their credit card? So isn't that nice of Bank of America to finally pass on some savings to its customers? Maybe some other banks should start to do that also. But again, isn't it so nice that the banks are now going to pass a little bit of the savings on to you, the customer, give you a few little crumbs? So there's some good news for you today. Now, I want to get into this first article on CNBC. Tax filers should expect delays as the IRS deals with limited staffing and last year's backlog. Last year's backlog involves 6 million people. Can we do anything in this country at this point? We hear about how wealthy our nation is, how technologically advanced we are, and all of the technology and computer systems and all these smart minds, and we cannot even take care of this issue at the IRS. We now have 105 container ships sitting off of Long Beach that are just floating around that can't be unloaded. So what is going on, ladies and gentlemen? What is going on? If you need that refund, here's the problem. If you need that refund to pay down those credit cards or to pay off the debt that you've been acquiring over the past year, don't hold your breath, because you don't know when you're going to get that refund. There were fewer than 15,000 workers to handle 240 million incoming calls during the first half of 2021. Think about that. That's one person for every 16,000 calls. Again, 105 ships sitting out in Long Beach today, and we have one person for every 16,000 people calling, asking tax questions, following up, maybe needing to pay money that's due, asking about refunds, whatever the case may be. One person for every 16,000. That doesn't sound very efficient. It doesn't sound very technologically advanced. It sounds like a disaster, like a mess. And again, this is just a reflection of the direction that we are going in. Empty grocery shelves return as sick employees and supply chain delays collide. More problems. As I said in one of my videos last week, I was at one of the major giant grocery stores out here, and I noticed the shelves much more empty than I've ever seen them before at that particular store. Now, I've shot some videos at Walmarts in the past, and it was obvious that there were shortages. Now, I guess they've returned. I never thought these shortages left. I mean, every day I've got people writing me, telling me they've been to the store, that they can't find a loaf of bread, milk is out, eggs are out, this, that. So, but according to this article, empty shelves have returned. Again, I never thought that they left. This seems to be a lingering problem. But the empty shelves have returned at supermarkets as grocery store employees don't show up to work and truckloads of food arrive late. We have a real labor crisis taking place. Now, for whatever reason, people are not showing up to work. You can come to your own determination of why that might be. It could be the health crisis. It could be people just aren't going to work. They just don't want to work. Numerous reasons. But food prices, no doubt, whether people are showing up to work or not, food prices are going to continue to go up. Fuel prices today, we saw oil $81.33 a barrel. The cost of labor, minimum wage is going up. Stores are having to pay people more money. And of course, the lack of workers. This is all being priced in, and it is going to raise the price of literally anything you buy: a pair of shoes, a shirt, a pair of jeans, a loaf of bread. Everything is going up. And I hope that all of you are preparing for this, because I think 2022, we're going to see record inflation, record shortages, record just backups with these ships at these ports. It's a disaster, and we don't know obviously what to do. This whole thing is a mess, and this is what's scary. Again, we're supposed to be the world superpower, technologically advanced, more money than everybody. Even though we are the biggest debtor nation, I get it, but we can't even get people. Like we don't even have enough people at the IRS to answer the phone. We can't unload ships that are sitting at our port, burning fuel every day. Terrible for the environment, right? And think about the supplies on these ships waiting 30, 40 days to be unloaded, because they're just bobbing around out in Long Beach there in the salt water. And as soon as temperatures warm up a little bit more out here on the West Coast, it's going to destroy a lot of what's on those ships. Electronics cannot be floating in 70, 80 degree weather in the ocean for 2 months. All right. It takes 2 weeks to come over from Asia. Then they're sitting here another 40 plus days bobbing around. This is bad for the inventory and the supplies in those containers on those ships. Another article today from CNBC. Domino's Pizza forecasts soaring food costs in 2022. Reiterates long-term sales outlook. The company is forecasting, get this, 8 to 10% jump in its food basket costs. 3 to 4 times the inflation for a typical year. Guess who's going to pay for this? You are. You want to order a Domino's pizza, one of the worst pizzas on the planet, in my opinion. But you're going to pay for it. So whether you go to a hamburger joint, a pizza joint, a seafood joint, a taco joint, everything is going up. The price of food, the price for fertilizer is absolutely soaring, and that's going to be passed on to you. So when the farmer fertilizes his crop of corn, the price of corn goes up. You're going to pay. We're paying, over $80 a barrel for oil. Price of fuel goes up. It's funny, a few months ago when I said that prices, this was probably 4 or 5 months ago, were skyrocketing. I noticed prices skyrocketing. And some woman wrote into me and says, I can't believe you use that word skyrocketing. Stop. Food prices are not skyrocketing. Where is that woman today? What do you think? Where are these people? It's amazing how people a year ago, or even less than a year ago, said we would never see inflation, food prices are not going to skyrocket, we'll never see shortages. JB, what are you talking about? Look, I read the comments, and I knew long before this, so did you, because you were reading the comments too. And thank you so much for the comments down below. So much information in those comments. Keep them coming. But you could just connect the dots and see what people were writing all over the country, what was happening, the closures, the shortages at the stores, price increases, people not showing up to work, all this starting last year. And all you had to do is read this information, connect the dots, and you knew exactly what was coming. And here it is today. And it's going to get much, much worse. And a lot of people were commenting about their restaurants and the quality of food, the terrible service. It's really, really sad, ladies and gentlemen, the environment that we're in right now. It really is. Nobody wants to work. Now, I'm not going to say nobody. There are people that do want to work, but it's just when you do go to work, they take so much out of your paycheck. Then you go to the gas station, put gas in your car, and that's more money out of your paycheck. Then you go to the store to buy food, that's more money out of your paycheck. And then by the end of the week, you look at your paycheck, and a lot of people are negative. There's nothing left, and people got to pay rent, they got mortgages. The kid falls down, needs to go to urgent care, flat tire, alternator goes out in the car, and people are getting so stressed out. Another article today on CNBC: retailers detail staffing shortages as The health crisis rages, but investors seeing it as a short-term hit. Shorter hours and labor constraints are going to continue to really affect this economy. I'll call up a restaurant. They close at 7 o'clock, 8 o'clock. I've never seen anything like it. We're in the twilight zone, ladies and gentlemen. I've never seen anything like it. Restaurants only open, certain days of the week. The hours now that these restaurants are operating at, I don't know how they're making money. How many of these restaurants and retailers are a year behind on their rent? I'd really like to know that. I wish we could really see the numbers, but nobody's releasing the data. How many people have been evicted out of their apartments? How many people have been foreclosed on their homes? It's very hard to find this data. Lululemon said sales in the November to January quarter will come in at the low end. Land's End cut its fiscal fourth quarter revenue estimates. Abercrombie and Fitch said the same thing. Urban Outfitters said shoppers in December just didn't show up. So the next problem is going to be this. It's not going to be the labor constraints. It's not going to be the shortages of retail supplies because really there is no real shortage because all of it's just sitting right out in Long Beach. They're just not unloading it. And why that is, again, we have so many rules and regulations here in the state of California. It's just backlogging everything. But the big problem here is it's not going to be floating cargo ships. It's not going to be labor constraints. And it's not even going to be inflation. You know what the big problem is going to be? The big problem is going to be when people just don't have money. That's going to be the big problem. And now that all the stimmies and all the benefits have dried up from last year, what are people going to rely on at this point to go to the store, to go to a retailer, to go out to dinner? What are they going to rely on? Because their savings have been wiped out. And many people, if they had anything left, spent it over the holidays to buy Christmas gifts. So we have this irresponsibility, this recklessness coming from the Fed down to the consumer. And now the consumer is realizing that they're out of juice. They've squeezed all the juice out of the lemon. So now what is going to support the economy when the average consumer has already wiped out and tapped out their bank account? I guess they'll continue to live off the equity they pulled out of their home, credit cards. But at this point, ladies and gentlemen, this thing is on borrowed time. And they could send everybody a $2,000 stimulus check. That's wonderful, but what is that really going to do? $2,000 doesn't even pay for a one-bedroom apartment in Orange County at this point. So I don't know what it's going to do. But this whole thing, in my humble opinion, is going to end very, very badly. Real wages plummet as inflation hits the U.S. recovery. This on the Hedge today. The U.S. never had a recovery. Let's be quite clear. This economy was never in recovery mode. It's not going to be in recovery mode. This economy is dead on arrival, and the consumer is now beginning to realize that they're in very, very big trouble. And this is why we're going to see big problems in the housing market, the auto market, the stock market, the bond market, and the social market, ladies and gentlemen. We're going to see big problems. Just 22% of people give themselves high scores when it comes to financial wellness. This on CNBC today. 22% gave themselves high scores when it comes to financial wellness. 21% gave themselves scores of 1 to 4. A majority of people in this survey said they were experiencing severe financial stress at a very high degree. 6 in 10 said that they have some or a lot of stress. Another article today coming from the Hedge: Bitcoin, bonds, big tech, and bullion bid on Powell's Goldilocks testimony. Well, I guess Mr. Powell today came out. Didn't see it, but I did read some of the statements. But apparently he didn't say anything too hot, didn't say anything too cold. But apparently this buy the dip or buy the effing dip is continuing to keep these markets alive and well. But it's scary, isn't it, that these markets are so dependent on the Fed to buy into these markets, so dependent on these dip buyers to continue to buy the effing dip. But just a couple highlights today. Dow Jones up 183 points. Mr. Jerome Powell said in this Fed meeting today that climate change is a top priority. The economy no longer needs aggressive stimulus. And my question is, why is he not talking about preserving and protecting the integrity of the U.S. dollar? Gold up today, silver up today, oil up today, Bitcoin up today. Again, this whole thing is so manipulated. We got the Fed buying, then you have all these retail investors buying the dip. But when the Fed stops buying bonds and mortgage-backed securities, that's going to eliminate $1 trillion a year in buying. Who's going to make up this? Who will buy the bonds? Who will buy the mortgage-backed securities? The Fed has been, throwing gasoline on this fire for years by acquiring $1 trillion a year in mortgage-backed securities and bonds. What happens when they exit the stage, ladies and gentlemen? Many people say, look, they're not going anywhere. They may hike rates a couple times. They may stop buying bonds and mortgage-backed securities, but as soon as things get sideways, they're going to come right back in. The minute they do that, it's over. That's when it is over. That's when you can kiss the U.S. dollar goodbye. That's when we'll all realize that the Fed has lost all control. Rates are going to go higher. Get ready for that, ladies and gentlemen. And another thing here that I wanted to note is the Fed has enabled the government to spend trillions of dollars. It's enabled the government to start wars all over the world, to build military bases all over the world. Such an abuse of power, in my opinion, of having the world reserve currency and doing this, and the Fed enabling all of this. And now we're at a point where they are going to lose control. Powell's top priority should have been the people and the U.S. dollar. But he doesn't say anything about it. They're going to raise rates. How high? I don't know. How many times? I don't know. But, leave it to the Fed to mess it up. They'll either raise rates too much or too little, and it's going to be a big problem. Whereas, why not let the markets dictate where the rates should be? Let the free market, but they're not free. So again, another example of why we know they're not free, because they won't allow the markets to decide what the rates should be. The Fed is going to decide where the rates should be, and they're going to probably, more than likely, make another bad decision and really do more damage to this economy and implode these markets. And maybe that's what they want to do. Think about that for a second. People just think like, well, the Fed's going to ride in and save everybody. They would never let the markets fail. They'll never let a collapse happen. But think about that. Maybe they would purposely collapse everything. Wouldn't that be great for all these massive institutions, the BlackRocks and the Blackstones and the huge hedge funds and the huge investment companies and the big banks? Wouldn't that be great for them? Because they're going to come in and scoop it all up. So careful what you believe in, careful who and what you trust, because you don't know what the Fed is going to do at this point. But don't underestimate the Fed, because they can bring this whole house of cards down, and they may just do it on purpose. So I know I'm all over the place today, but I just jotted down some notes. I wanted to share it with you. Give me your opinion on things. Let me know what you think. When will we see the first rate hike? I believe it's going to be around March, April. That's too far out. They should have been raising rates years ago. Why are they waiting? If things are so good, if unemployment is 3.9%, the consumer is strong, the markets are doing well, then why are they not raising rates? Why are they waiting? So again, they need to raise these rates, and these rates need to be aggressively risen. We need to be at rates above inflation, or we're going to continue to have big problems. And apparently, from what I see, we have Jerome Powell, the Fed chairman, and I don't think he can really tackle this. I think he's getting more political than really protecting the US dollar, the people, and the reputation of this great country. I think he's just another political puppet. We shall see. But it's so late to even begin doing this. I don't know, ladies and gentlemen. It's going to get ugly. It's going to get really, really ugly. And if you think that you're seeing shortages now, if you think you're seeing inflation now, wait till you see what's coming. Be careful. Be safe. God bless all of you. Talk with all of you very, very soon.